Welcome to our weekly Forex and futures forecast. As always, we need to remind you that trading is a risky endeavor and not suitable for all investors. You're not going to win every time out. I think most of you all understand that. Very proud of our new book, The Secret to Trading, Forex, Futures, and ETFs, Risk Tolerance Threshold Theory. That's a heavy book. Getting some good reviews. We're glad to see that. Hey, let's get to the markets. First market we cover is the Australian US dollar. You could see you had a pretty good rally in the Aussie US dollar this week. Short term, we backed off of that market on Tuesday. That was in here. You closed strong on Tuesday. Tuesday into Wednesday, you cleared some pretty heavy levels there. Australia had a really nice jobs report Wednesday into Thursday. That was a big number, and that was really enough to turn the other markets also. The euro we saw took strength later in the week. He had a pretty good short covering rally on Friday. Overall, we're more leery now of taking sell signals in the Aussie. You shifted that long-term micro up. From here down, that pattern's obviously up. You cleared those highs, so we're a little bit leery about that now. Potentially, you make a higher high there. You're still below that day-to-day resistance. Day-to-day down right now. Taking sell signals against that, yeah, that'd be interesting from a shorter-term trader's perspective, but it would also be a counter-trend trade also. So we've really got to kind of hold off here on selling rallies, given they're no longer trend trades. I almost don't want to see the Aussie go back into that sideways range that it's been in for some time, but it is what it is. They'd like to see some sustained currency movements, some sustained trending moves, but you have to take what they give us. Aussie had a great jobs number. They've been having improved economic data down there. I really think it comes down to what happens in China. Does China have a normal slowdown? And I think if they do, then you're going to see that you'll see the test of power in the Aussie. But for right now, you're still seeing sovereign funds coming in there. We had to back off on Tuesday of our shorts, and it's been on a roll ever since. Next market, the euro US dollar, and in fact, strength in the Aussie bled through to strength in the euro. Here you had a pretty good short covering rally on Friday. Here, however, we're still in the bear camp. You have those longer-term micro patterns still down. Certainly your day-to-day is down. So here we'll look to see what they give us. I said it in our midweek report on our Seeking Alpha blog that if you consider this a wave one down, for lack of a better description, consider this wave one down. And we do think this is the beginning, a resumption of that overall primary downtrend and probably a new wave down in a new pattern to evolve. So, even in our most bearish scenario, if this is a new wave down, you'd still expect some form of a correction. So we're kind of on the sidelines here. We'll have to see what they give us intraday, of course. That's a whole nother game. But overall, if you believe this is wave one down, which we do, then you'd have to see some kind of a corrective, some kind of reactive wave higher here. So we're going to keep an eye out for that in the euro US dollar. I said in our midweek report that we're not going to be so aggressive as far as letting profits run. And Tuesday night into Wednesday, we put that out, and that happened to have been the case for sure. And by the way, we'll list that blog underneath this video. We'll list the index there, so you can go back and you can see what we've written throughout over the course of the months and the weeks and even in the days too. That'll be helpful. Next market will be the pound dollar. What can you say about the pound? It's just extremely weak. You took out the 150 level. We definitely see selling rallies here would be our course. Even you could see Friday you saw weakness. Yeah, you had a short covering rally, but look at it, easily it closed in the bottom third of Friday's range. So we see continued weakness. We see the way to go there is continue to sell rallies in the pound. Dollar yen finally started to give a bit of a correction. Friday corrections, they're kind of a dime a dozen. That's why we call them counter trend Friday. So many times you see Thursday into Friday, you get a counter trend move. You saw it in the euro this week, and you're seeing it in dollar yen right now. We don't advocate counter trend trading or top picking. I've seen it firsthand how really picking tops or bottoms in trading has killed more traders than cigarettes and booze combined. It's a tough way to make a living picking tops and bottoms, so we're definitely not advocating top picking. If anything, we'd like to see some form of orderly correction and then ideally get back long with this market. But, we'll have to see. I'm not I haven't been trading the Dow yen or the yen pairs as much too, so I'm a little out of sync here. I've been focusing on the euro and the Aussie. Here, next market, the U.S. stock market. The great bull, as we've said all along, you get that close to all-time high, you're generally going to see it. You definitely have momentum up still. You got the slope is definitely up, so we would continue to see more of the same. On the other hand, I think there's a similarity between the stocks and the Aussie too, and the common denominator is China. If you saw a correction in China, even a normal correction in the Chinese economy, that may bleed through and lead to a correction in the U.S. stock market. But you can see you have a clean 3 waves up here. You're about halfway through that third wave, I guess. Maybe a little more than that, but we think you'll see a little bit more downside there. And again, the same story as far as picking tops. It's just not worth it. It's so much easier to find a trend out there and go along with it. Next market will be the gold market. Speaking of trends, we see the trend down over here. And overall, we think you have to still sell rallies. That's going to be the order of the day. You get a nice clump of volume, nice volume surge here at 1575, and that probably helped that market stabilize in that area, and you probably contributed to good volume there. You had short covering on the way down. From a hedging perspective, though, we think you still have to sell rallies in gold. If you want to, I don't think there's anything wrong with hanging on to gold longer term, but at the same time, you may want to hedge out as far as selling rallies in the gold market. Gold very similar to the other commodities. Here's a corn chart I'm looking at, and so many of these commodities kind of share that same pattern. You had that big rally last year. You came down, you stabilized. You actually have a nice double bottom here, but long term it's stabilizing, but you still have this pattern of lower highs, continued lower highs. So we think if you're on the commodity side and you happen to have exposure there, it may not be a bad idea to consider hedging some of that out on this next little rally. I think you get a little bit higher in the corn there. That may not be a bad area to hedge some off. And if you're interested in knowing what we're doing on the education side of the business, here's our site at Trading University. It's a 6-month program. However, you get all the material up front. You get access to the advanced course, graduate course, master's course archives for $199 a month. You can opt out at any time. So there's no commitment to stick with the 6-month program. That's the option if you have it, if you want it. And again, you get all the material up front. Or if you're in more of a hurry, you open up a live account with Forex.com, FXCM, open eCry on the future side. You can receive the Masters Trading Program, the 6-month program, for free. So go to EOS Trade and see details about that. You will not, however, get that one-on-one mentoring and get to participate in that Skype chat group with the other students. Okay, thank you so much, and we'll see you next week.